Hey, welcome back to YT Finance, and today we are talking about Senseonics SENS stock. We will be discussing how high Sens Stock can be valued by year's end, if now is a good time to buy into Senseonics stock, or if you should be trading it right now instead of holding it long term. We will also discuss the good news that has come out recently about Senseonics stock, and how that will positively affect the stock price. And then lastly, we will go over some Senseonics stock price predictions and what analysts think of Senseonics stock, so we can determine if Senseonics is a good long-term or short-term investment. Go and press the like button right now on this video for more Senseonics stock news updates. Comment your thoughts down below on Senseonics stock, turn on subscription notifications if you are new, and now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies, but right now you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account. And you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Many retail investors and traders from Twitter and the subreddit named Wall Street Bets are flooding money into stocks like Senseonics stock, WKHS stock, Root stock, PUBM stock, Clove stock, GME stock, and AMC stock, which are heavily being shorted by various funds. And because of this short selling, retail investors hope to create a short squeeze so the price of these stocks surge. Right now, Senseonics has experienced some squeezes, but nothing too crazy yet, because currently we are waiting for the FDA approval for their 180-day continuous glucose monitoring system for diabetes patients, which we will talk about later in the video. FDA approvals are great catalysts, so we will talk about some options you have regarding how to play this catalyst to ensure that you walk away with money while managing your risk well. Senseonics had an extremely nice revenue increase for Q1 of 2021 because Q1 of 2020, Senseonics made $36,000 in revenue, and this quarter they made $2.85 million, so that is a huge increase. However, Senseonics did have a very bad net loss. The reason for Senseonics' recent rally for their SENS stock price was due to another catalyst where their 180-day CGM Eversense system showed amazing results from a PROMISE study, which we touched on and talked about last video. But now let's talk about if you should buy now or wait in regards to Senseonics stock. Well, let's use momentum as an indicator before we go to the analysts to see what they say about SENS stock, so let's see what this says. Senseonics has an overall score of 46, which means that it holds better value than 46% of all stocks on the market right now. This analysis takes into consideration both technical and fundamental factors, but it does not anticipate future rewards. It takes into consideration what the stock has done recently in terms of price action, but it does not forecast what we can expect from this stock. Senseonics' short-term technical score is actually a 60, which puts it at a neutral rating, but overall the score is not bad. However, I do not put too much weight on this scoring system and analysis because past and current value does not dictate future performance of a stock, but it is a good place to start for our analysis. According to analysts, SENS stock has 2 buy ratings, 3 hold ratings, and 2 sell ratings. So the majority of analysts say to hold Sens stock until next year. Currently, the low-end price prediction is 80 cents, the median price target is $2.25 a share, and the high price target is $4. Now, these prices may seem low to you at first, but these price targets are only for this year, so Senseonics stock can be worth much more than this later. It also means that the stock can surge to $6 or even $7, but these analysts just think that eventually the price will come back down to around these levels and consolidate. I personally personally anticipate that these price predictions will be outdated in the next few months, which is why I myself do not have a price prediction, and instead I would use a strategy to make money off of this stock, which we will address and go in depth into later in the video. Right now, Senseonics will capitalize on this rally by keeping this momentum up for as long as they can, so hopefully their management will use this as a time to use their resources to accelerate their plan to fully enter the United States market, which will rely heavily on their FDA approval. Now here is how I've been saying to play Sens Stock, and it has worked out wonderfully. Get a good entry price. If your average price is already below 80 cents, then feel free to not use this strategy and simply hold the stock long term because your risk is already so low. However, depending on how long you plan on holding the stock, you could use this pre-anticipatory FDA approval catalyst to get some quick money by investing now and allowing the stock to rally based on the anticipation of the FDA approval. Remember to take profits periodically though, because the approval could be in a few months or even sooner, and if the hype goes down before that, you could lose money. Now, in the event that you invested in the stock does sink prematurely, then play the opposite opportunity by holding the stock until the FDA approval is announced, and in that case, it will cause the stock to surge. Then you would take profits out while leaving some money still in the stock and let that ride long term. So basically, use the catalyst to trade and take profits on rallies, but let your original investment ride long term if you believe in the technology. According to Fintel, Senseonics had a short squeeze score of a 93 out of a 99, but recently it has dropped down to a 75, which is still enough for the stock to experience a short squeeze rally again, but it will need more capital to do so. Another potential short squeeze candidate is Clean Energy Fuels Corporation, ticker symbol CLNE, which has also seen some squeezing and some positive price action, but we're just going to focus on Senseonics for the remainder of this video. Speaking of which, short interests have been decreasing through really great stocks including AMC, GME, Clove, and CLNE, which we just talked about. But what this chart does not show is how sensitive these stocks still remain for a short squeeze, especially AMC. This only shows the shorted shares of the existing float, but it doesn't show how much of the float that doesn't exist that has also been shorted. And if you don't know what I'm talking about, just Google phantom shares or naked short selling and then you'll get the gist. However, when Senseonics is compared to Dexcom or a bot for long-term holders, a bot and Dexcom are still safer. Not saying that Senseonics doesn't have amazing growth potential, but from a risk management perspective, a mix of all three is very beneficial, especially for long-term holders. But what do you all think? Comment your thoughts down below. Remember to hit the like button on this video right now, subscribe if you are new, and I will see all of you in the next YT video.